So, we've got a number one deluxe meal. Is there anything else I can get you?
Yeah, I'd also like a good night's sleep.
Excuse me, sir?
You know, the I didn't struggle all night with my uncomfortable CPAP mask, or something like the my wife didn't kick me out to sleep on the couch because of my constant tossing and turning.
Sir, we don't have anything like that here. I think what you're looking for is Inspire. It's an implant that works inside your body to treat sleep apnea without a CPAP. That way you can breathe normally and rest more soundly.
Come on! Oh, he sounds hangry. Inspire is the only FDA-approved sleep apnea treatment of its kind. It's helping tens of thousands of people finally get restful sleep. To learn more, visit InspireSleep.com. That's InspireSleep.com. Inspire, sleep apnea innovation. Inspire is not for everyone. Talk to your doctor to see if it's right for you and review important safety information at InspireSleep.com.
And good evening. This is Mottek On Money. We're doing it live right here, weeknights at our new time of the 5 o'clock hour in Los Angeles. Mottek On Money 5 nights a week for you, live on the air here on 790 KABC, streaming live online worldwide at KABC.com, and the on-demand Mottek On Money podcast at KABC.com, Apple iTunes, all your favorite podcast platforms, and on the socials too, on X, formerly known as Twitter, and Instagram. Lower start to the month of August for the financial markets, with the major averages pulling back from highs of the year and a 5-month winning streak following another winning month of July. The S&P 500 index had closed out July at a 16-month high, having gained 19.2% since the start of this year, with the S&P 500 now only just about 5% away from its record high. Investors taking a bit of a breather before earnings reports from Apple and Amazon later this week. The earnings parade did continue today with Uber, Pfizer, JetBlue, and Caterpillar reporting, driving a lot of the market action. The Dow came in for a closing gain of 71 points. The S&P 500 finished down 12, and the NASDAQ gave back 62 points. We did have a mixed finish today for the major averages. Tupperware brands soaring 27% after producing a record monthly gain of 434% last month, as the maker of the food storage containers enjoys a meme-like attention these days from investors. Well, you've heard of the hot labor summer, hot political summer, too. Another legal hump for President Trump. Former President Trump indicted today on charges stemming from special counsel Jack Smith's investigation into the Capitol riot back on January 6, 2021. We'll talk about that tonight, and we'll talk about it with our legal analyst, Royal Oakes, who happens to be hosting the 790 KBC News Blitz tonight in the 6 p.m. hour. Royal Oakes will be joining me live to discuss the latest action taken against President Trump, who happens to be the Republican presidential frontrunner these days. Taking a look at what else is happening, we're following real estate very closely, of course, and mortgage rates coming off the 20-year highs last year. On real estate tonight, we'll be bringing in Jeff Lazerson, the president of MortgageGrader.com and Orange County Register real estate columnist, as we keep an eagle eye on those mortgage rates as well as home prices and availability. Renters, meanwhile, in the city of Los Angeles could soon be evicted from their properties over unpaid rent from the coronavirus pandemic days. The deadline to pay rental debts accumulated from March 1st of 2020 and September 30th, 2021 is today, August 1st, and they must be paid in full. Another deadline is just months away, with renters having to pay back the unpaid rent from October 1st, 2021 to January 31st of this year by February 1st, 2024. First, on the markets and the economy and the whole works this evening, let's bring in Gabriel Wisdom now, Managing Director at American Money Management, based here in Southern California, author of Wisdom on Value Investing. A lot to talk about here as we kick off the new month of August. Markets have been on a roll lately. Gabriel, give us your view of things here at the moment.
Well, Frank, it appears that that wall of worry that we've been talking about since the beginning of the year, that's been scaled. The market is at the top now, and we went from the peak of maximum pessimism to a good deal of irrational optimism. In fact, this has been the longest winning streak in some time for the broad markets, and for the NASDAQ, it's the best showing since 1975. Now, there's a lot to be exuberant about. There's artificial intelligence, there's cooling inflation growth, there's positive economic data, which we're seeing in the earnings that's being reported. But are we near the end? Interest rates have been going up. the Federal Reserve shows no sign of really stalling, not at all. In fact, the Fed wants to keep financial conditions tight. And then you have the meme stocks that you've been talking about, like Tupperware. I mean, they issued a going concern warning. That means that they're not even sure they're going to be able to stay in business. And it's up some 800% in a couple of weeks. There's another one as well. There's Nikola, which was the electrical vehicle startup that turned out to have some funny numbers. And that's been part of a 400+% rally on social media hype. And there's others like Carvana. Maybe that's real. But this tells me that there's a lot of what Greenspan used to call irrational exuberance.
There you go. Well, certainly Tupperware investors are hoping the stock will not put a lid on it, right? What about that Tupperware? You think it's got higher to go, more to run?
Well, I don't know. The number of short sellers, I think, was a big part of why the stock popped so hard. It's up over 1,500% so far. I believe that's the number. No, that's Carvana. Excuse me. Carvana is up some 1,500%. Tupperware, as I mentioned, is up some 800%. But these are companies that are like, zombie companies. They're just not profitable. They hope to be. Maybe they'll reorganize. In fact, in the case of Nikola, they're having an annual shareholder meeting August 3, where investors are expected to vote on a plan to increase the number of shares of the company so they can finance their going concern. And Nikola wants to keep the momentum news going, I would think, so just ahead of the vote so they can issue more stock and have some more money. But these are kinds of straws in the wind that gives me some concern.
Right. I see Tupperware was up, about 26% today, up $1.11 to $5.38. So we'll definitely keep an eye on that one. And by the way, we got the Mega Millions jackpot above $1 billion here tonight. We're reminded the odds of winning the Mega Millions are worse than getting killed by a shark. So maybe Tupperware might be a better bet at this point. We'll have to wait and see how that plays out. Now, it is the hot labor summer. We've been talking about that, of course, Gabriel Wisdom and the media stocks coming under pressure as Hollywood production remains shut down to the writers and actors strike here in Hollywood. What about those media names at this point and the outlook for how all this is going to play out?
Well, my favorite media man would be Disney. I think the magic will return. There's a focus on lower costs, and they're doing what they do best. They've had a long slump, and the stock seems to be flatlining. Well, return on shareholders' equity continues to compound. That's a very good sign, and you get a dividend while you wait. But this strike, the summer of strikes, is the result of a wage price spiral that's affecting everybody that goes to work. And now I think GM is next up to face a labor strike. The summer of strikes is affecting all these large companies where employees get together and demand higher wages because it costs more to live.
All right, what about the travel names? We've seen this rush to get out there on cruises, for example, and airlines, but I see the cruise line stocks have taken a hit this week with Norwegian Cruise Line stock plummeting after the company set a third-quarter profit outlook that was narrower than Wall Street analysts had expected. Carnival shares down as well, Royal Caribbean moving lower, and today JetBlue shares down more than 8% after JetBlue warned that it would post a potential third-quarter loss due to competition with international travel and other challenges. What about those travel names here at this point?
Well, Frank, those are the kind of bellwethers that give you some indication of which way the wind is blowing. And market sentiment has swung dramatically from the end of 2022 through early summer here. Investors were pretty bearish, and they were going on vacations, they were traveling, feeling better, and if you were willing to overweight stocks, all of a sudden, the amount of volatility has gone to certainly recent lows. Back in September, the S&P 500 forward-looking price-earnings multiple was at 15 times. Those travel names you mentioned were at lower price-earnings multiples even. Today, the broad market is 19 times earnings. And, this increasing bullishness in the marketplace against a backdrop of slowing business. People are buying fewer things, and now they're starting to travel less, as we see in those travel stocks. I think we're due for a slowdown.
Very interesting, and that's what the Fed wants, right, to fight still hot inflation following that bump up in rates last week. What do you think the Fed's next move will be, and where does this economy go from here?
I think the Fed may surprise us with another rate hike, or at least they'll stand pat, and they'll hike again. They want to see this market. They want to see this economy really slow down. We're still sizzling here in the United States, whereas the rest of the world is fizzling. The U.S. economy for the past year and a half has been pretty strong. In fact, construction spending continued to reach some new record highs in June, and May's data was revised higher according to Yardeni's data here. Private residential investment showing the first back-to-back gain in over a year. So there's a lot of optimism. At the same time, rates are likely to go higher because the Fed is looking at this data.
Right, so we already have short-term rates now at a 22-year high following that bump up last week, and that's certainly a very important consideration right now with the adjustable rate mortgages also moving up in all this, and we've seen fixed-rate mortgage rates move higher as well lately. What do you see ahead on the real estate front? We'll be talking real estate this evening with Jeff Lazerson from Mortgage Grader on mortgage rates and what's happening on the local market, but with real estate such a big part of the economy, want to get your opinion on that as well, and also on commercial real estate, which is still having hard times given that slow return to the office and so many office building foreclosures and even some retail property foreclosures nowadays.
Well, that's right. I think commercial real estate is really the worrisome area. Many of these companies, big ones, that are either having strikes or the threat of labor strife, are making concessions so that people don't have to work at the office quite as much. They're hybrid arrangements or work at home entirely. And so all this vacant office space is very problematic. What happens is there's a trickle down. It's a symmetry of it's a wave of or shock waves that occur. And I think the real estate markets are likely to soften here. That would be my guess. But Jeff Lazerson is going to have on. He would be a more informed source.
Certainly, we'll discuss it with him. And with the turmoil we've seen in the regional banks, certainly commercial real estate has been a driver in those concerns. So we'll continue to follow that. What about the regional banks and following that PacWest Bank of California merger just this past week? That put regional banks back in focus. Has that storm cleared now, Gabriel?
Introducing Rich Valdez, America at Night, the podcast.
Welcome to the conversation, familia.
A perfect blend of news and entertainment, interviews and insights.
It's really just an expose on how messed up things are.
America's nighttime town hall whenever you want.
It's a huge problem that deserves a lot more attention.
Rich Valdez, America at Night. Follow the podcast wherever you listen.
Well, you'd think that the Federal Reserve would do whatever it could to keep, another contagion from occurring, like we saw just a few months ago. And so I hope that would be the case. One of the preferred yardsticks of where the market and the economy are going, and this is one Warren Buffett has been talking about for the last 20 years, it compares the total market capitalization or the value of the actively traded stock market divided by the latest official estimates for quarterly gross domestic product. Without getting too technical here, the total value of the broad stock market's about $46 trillion, but the second quarter gross domestic product is only $26.8 trillion. That means the market and the economy it's just too hot. And if this is something Warren Buffett, the world's most celebrated investor, has followed and talked about for as long as I can remember, and so I'd say we need. I mean, my preferred approach here would be defensive.
All right, and at this point, then, let me ask you the big question here: where are you putting money now, and/or taking it off the table?
Well, Frank, Starbucks missed their third quarter comparable same store sales estimates, but in China, they've had a 46% increase in sales growth. They've also opened several hundred new stores. I think it was 588 new stores. Their total store count is well over 37,000 stores. 51% are company operated, 49% are licensed. Starbucks stock is only up 2% year to date. And I remember 10 years ago, I was in Beijing at a Starbucks. I tried to order a cup of coffee, but since I didn't know the word in Chinese for coffee, someone had to interpret this for me. I couldn't buy a Starbucks coffee by ordering coffee. I had to use the local word, but that's no longer the case. I think SBUX looks interesting here. And then I mentioned that I think bonds are cheap. Interest rates have gone up so much, stocks are looking more expensive now. I buy interest-sensitive securities. That's the utilities that haven't done so well, as a matter of fact. So utilities and interest-sensitive areas will be on my radar.
I want to be able to order coffee at any time. What is the word for coffee in Chinese?
I don't remember, but it bailed me out at the time.
We don't want to be caught without the word right there at our fingertips here. So we'll look that up right away, just in case that comes up. And let me ask you about oil, because it's moving up above 80 here, and gas prices, as you probably have noticed, since you're one of us here, Gabriel Wisdom, driving around with the average price for regular gas in L.A. back above $5 a gallon as of last week. What about gas and oil and gas and oil stocks here?
Well, the Chevron's profits topped analyst outlooks, but some of that had to do with their acquisition of a big company, PDC Energy. But just the same, the demand for oil and gas has never been greater. ExxonMobil and some of the others in the oil complex a little softer because the prices come down, but they're all investing in alternative energy. In the meantime, in the open market, one of the great downturn indicators that I know of is the recreational vehicle market. The RV downturn is pretty substantial, where you can get a good deal if you want to drive around in a big gas guzzling RV right now, because they're just not selling like they were. Americans bought a lot of these RVs during the pandemic, but that's over.
All right. I'm reliably informed that K-fee is the Chinese word for coffee, so that will be important information for the folks out there tonight as well. Gabriel Wisdom, always fantastic to speak with you. Thank you very much for taking the call live with us here this evening.
Thank you, Frank.
That is Gabriel Wisdom, Managing Director of American Money Management, based here in Southern California, and author of Wisdom on Value Investing. Live with us here on Mottek On Money on 790 KBC. Kaboom, it is jarring to have a car accident and hard to think clearly when you're hurt. So my friend, attorney Clark Fielding of Fielding Law, has created something to help you. It's a guide called Be Prepared Before a Motor Vehicle Accident. The guide is one page, fits right there in your glove compartment, and gives you everything you need in case you're hurt in an accident. Go to ClarkTheSharkLaw.com and download your free one-page guide and keep it right there in the glove box, and put Clark Fielding's number in your phone under the word accident. So all you have to do is hit the number when you need him. Tell your friends and family to do the same. So if you're hurt in an accident, call the one we all trust, attorney Clark Fielding. The number is 833-88-SHARK. That's 833-88-SHARK, 833-88-SHARK, and download the Be Prepared Before a Motor Vehicle Accident guide at ClarkTheSharkLaw.com. ClarkTheSharkLaw.com. Again, that's ClarkTheSharkLaw.com. 790 KBC welcomes you guests at Belinda Carlisle, coming to the Libby Bowl August 24th. Tickets are on sale now at AXS.com. And right now, caller 9 wins at 1-888-790-5222. Get a pair of tickets to the show if you're caller 9. Call Tricia Cruz here now with her assistant, Catherine. The number to call is 1-888-790-5222 for a pair of tickets to the Belinda Carlisle show, coming to the Libby Bowl August 24th. Mottek On Money continues here now on 790 KBC. Kind of a mixed start to the month of August. On Wall Street, the Dow managed a closing gain of 71 points. The S&P 500 slipped 12. The NASDAQ Composite gave back 62 points. The S&P 500 coming off the highest we've seen in 16 months. Taking a look at, Tupperware brands, believe it or not, up 26% after producing a record monthly gain of 434% just last month. As the maker of those storage containers enjoys lots of attention from investors despite the company's financial troubles. As we just heard from Gabriel Wisdom today, Tupperware shares soared $1.11 to $5.38, a gain of 26%. Among the other movers today, Caterpillar shares up 8% after that construction machine maker reported second quarter earnings that beat analysts' expectations. The earnings parade continues with JetBlue down more than 8%. After the airline warned it would post a potential third-quarter loss due to competition. And the Pfizer shares down about 1% after the drug giant's second-quarter earnings fell sharply from a year ago as sales of its COVID vaccine and antiviral tumbled to drive a more than 50% decline in revenue at Pfizer. And Uber shares down nearly 6% to pull back from a two-year high today after Uber reported its first quarterly operational profit, but said the chief financial officer planned to leave the company in January. The price of oil still stubbornly high, above $82 a barrel here today. And gas prices, in case you hadn't noticed, still up there at $5.11. The average price now for regular gas in Los Angeles, $5.44. The average price for premium in the L.A. Long Beach area, $5.46 now the average price for diesel. And the price of gold still dancing around $2,000, up $8 today at $1,986.90 an ounce. Mottek On Money continues here in 790 KBC. Good evening. Well, interest rates ticking higher last week thanks to the Federal Reserve, with the prime lending rate now at 8.5%, impacting business and consumer loans, including adjustable rate mortgages and home equity lines of credit. The yield on the 10-year note, which impacts fixed-rate mortgage rates, has moved above 4% again, hit a 20-year high last year, impacting the real estate business. And we're watching this big news now. Fitch Ratings has downgraded the U.S. government's credit rating, citing rising debt at the federal, state, and local levels and a steady deterioration in standards of governance over the past 2 decades. This is big news. The rating cut today 1 notch to AA+ from AAA, the highest possible rating. The new rating is still well into investment grade, though. The decision illustrates one way the growing political polarization and repeated Washington standoffs over spending and taxes could end up costing U.S. taxpayers. A lower credit rating over time could raise borrowing costs for the U.S. government. In the meantime, it looks like home buyers will be paying more. Let's bring in Jeff LAZERSON now, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for taking the call here. Take it from the top, and how are the rates looking right now?
Frank, they're on the rise. I don't know how else to say it. The 30-year fixed is at 6 5/8% at one point. The 15-year fix is at 6 1/8% at one point, and that's up to $726,200. The high balance loan, so that's $726,201 to $1,089,300 in LA and Orange County only. It's 7 1/8 on a 30-year fixed at one point, and the 15-year is at 6 7/8% at one point. Jumbo loans, so that's anything over the $1,089,300 in LA and Orange County, and in the Inland Empire, it's anything over $726,200. That's 6 7/8 at one point. Also, FHA and VA are 6 1/4% at one point, and the prime lending rate, of course, is now at 8.5%.
Right, and where do you see the rates go from here?
Well, that report you just read wasn't great, Frank. Yeah. I say rates are going up a little bit more. Freddie Mac rates last week were at 6.81%. I would expect this week, when Freddie announces Thursday morning, it'll probably land at 6.9 or something like that. But it's gonna get over 7% soon enough. And most of the people I've been talking to, the economists I talked to, they're all in the 6.5 to 7.5% range, somewhere in there. And I'm expecting just a little bit north of 7. So it's getting higher, not lower.
All right. And what I just read regarding the downgrade, it was only the second time in U.S. history that Uncle Sam's credit rating has been cut, back in 2011. And we were on the air back then, Jeff. The rating agency Standard & Poor's stripped the U.S. of its AAA rating after a prolonged fight back then over the government's borrowing limit. The Government Accountability Office, in a 2012 report, estimated that The 2011 budget standoff back then raised Treasury borrowing costs by $1.3 billion last year. So this latest move by Fitch, not good. Fitch citing the worsening political divisions around spending and tax policy as a key reason for its decision today. And it said U.S. governance has declined relative to other highly rated countries, and it noted repeated debt limit standoffs and last-minute resolutions. So what's happening in Washington now impacting people's taxpayers' pocketbooks in a big way.
Yeah, so it's runaway inflation, runaway spending. There's as long as I have checks, I can write them, and it's a terrible way to govern. I'm also hearing a lot more noise about Fannie Mae buying loans back from some years ago, loans that were perfectly well performing. Lenders are getting these buyback demands because of an I wasn't dotted or a T wasn't crossed, and that surprised me a little bit. But I'm hearing more and more of it. So maybe they're trying to clean up their books too, and try to offload loans as much as they can to other people, to what we call the junk dealers. So I'm hearing it from the lenders. So I think that Fitch report is probably spot on.
Mm-hmm. Well, that's very, very big news, and I'm sure that we'll see some follow-up tomorrow morning at the opening bell there. And let me ask you this, Jeff. What else are you hearing from the lenders? In addition to higher rates, is it indeed harder to get a loan nowadays?
I don't know that it's harder, Frank. I mean, other than the fact that the affordability is less because rates are higher. I mean, the reverse mortgages are a lot worse because as rates are higher, you have to have so much more equity in the property to be able to get any reverse for a senior. And FHA doesn't, recognize the property values over $1 million. You could have a $5 million property, and the way the systems worked, it's only up to $1 million. So the reverse mortgages that group is struggling. The lenders out there in general are just, truly starving for business, and they're wanting to do everything and anything, and the deals are very messy, for the most part, very messy, and they tend to go nowhere fast. So many deals are falling out for all kinds of reasons. Borrower uncertainty, they get into the inspection, or they have second thoughts, get cold feet. Seller thinks that their property is worth more than anything else because there's little inventory. So that's not good at all. And then this week I'm writing about pocket listings. So I got some data that indicates 6% of all listings in the 4 counties, LA, Riverside, San Bernardino, and Orange County, 6% in the last 6 months were on the market 0 or 1 days. So that means that a lot of the agents are just holding on and not really putting it out to the market so that they could double end the commissions on it. And it really puts the buyers at a disadvantage because there's so little inventory to buy in the first place, but a lot of these agents just want to double end the deals, and that's what they're doing.
As far as home prices are concerned, of course, affordability and availability are big issues here in the Los Angeles area. We had Selma Hepp on from CoreLogic last week with their latest readings. Just since you're on the front line of all this, Jeff, what about home prices? Where are they heading from here?
I still see them, going up. I mean, eventually with these rate increases, it's gonna flatten things out a little bit more. But this area, there's just such a shortage of housing. There's a lot of demand, and rents are so expensive that people are just driven to buy. And if somebody called me up right now, I would tell them to buy because even though you're going to get stuck with a high rate right now, rates are going to come down eventually, and so I'm pretty bullish on the prices right now. I mean, they'll probably flatten out later this year or something like that, but I would encourage anybody to buy. And if you're thinking about renting out your property and not selling it, you should rent it out and not sell it if you can hang on to it, because rents, people are getting astronomical dollars for rents, and of course now with those rules changed about the tenants that weren't paying, things have changed now that they have to start paying. So it's really a better place for landlords right now.
A lot of moving parts here. All right, renters in L.A. Could soon be evicted. Today is August 1st. Today's the day back rent is due. Have you seen any evidence of an avalanche of evictions any place at this point?
No, not at all, Frank. I think a lot of that stuff has probably gotten addressed and cleaned up. But going forward, people, if they're struggling with their job situation or something like that, there's no sort of safe harbor for them. Either they're going to have to pay or they're going to get evicted sooner than later. And unlike we're in the pandemic days where you could, camp out in a place and not pay for a year or something or more than that. So it's, the renters have to be on guard, and if they can't pay, they're going to have to move to more affordable quarters.
Yeah, well, I have to tell you, driving around the Los Angeles area today, I saw a lot of furniture at the curb, and it looks like a lot of places have been cleared out given the deadline today. So that's something I noticed just driving around the area. So, well, Jeff, thank you very much for that important update tonight. We'll look for your column this weekend. That is Jeff LAZERSON, the president of MortgageGrader.com, and also Orange County Register real estate columnist, live with us here tonight on Mottek On Money on 790 KABC. Does your knee pain keep getting worse? How about that pain in your shoulder or hip or back? Don't let them tell you steroids and surgery are your only option. Take my advice now and call QC Kinetics. It's Frank Mottek here. QC Kinetics can make that pain go away with all natural advanced regenerative medicine. They're helping people here every day with these amazing natural treatments that restore and repair your damaged joint tissue. It's like turning back the clock. Regenerative medicine uses concentrated healing agents from your very own body to stimulate the damaged tissue in your joint so they work like they're supposed to, and there's zero downtime. QC Kinetics is the nation's leader in this exciting medical breakthrough. Patients are getting real lasting relief and are saying no to surgery and drugs. If you have pain due to injury or arthritis, this is a remarkable option that you need to check out, and the consultation is absolutely free. Call QC Kinetics with locations now in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. That's 213-997-PAIN. Again, 213-997-PAIN. Mottek On Money continues here in 790 KABC. Another legal hump for President Trump, who happens to be the leading candidate in the presidential race for president at this point. Yeah, former President Trump indicted again today, this time charges stemming from the special counsel Jack Smith's investigation of the Capitol riot back on January 6th, 2021, the second federal indictment the former president faces out of Smith's investigation. Joining us live now, our legal eagle, 790 KABC legal analyst Royal Oakes joins me live here in the studio. We'll also be hosting the 790 KBC News Blitz coming up in the 6 o'clock hour. Royal Oakes, thank you very much for coming into the studio here to discuss this important issue, and I know you'll have a lot more in the 6 o'clock hour, but give us your first reaction to this latest legal action filed against President Trump.
Well, one reaction is I think you're great at rhyming, the Trump and the hump thing. I mean, Mayor Karen Bass is pretty good at this. I think you could give her a run for her money. Yeah, absolutely. So this is weird, isn't it, Frank, because a lot of people, I think, are surprised by this deal because they thought, well, Jack Smith, he's the prosecutor down at Mar-a-Lago, Miami Beach. But no, his responsibility included this additional stuff about whether Donald Trump tried to illegally steal the 2020 election. And they were also surprised, I think, Frank, because a lot of people thought, they'll charge Donald Trump January 6th because he incited a riot. Everybody went down and started committing violent acts. But that's really not the indictment here. The indictment is a more focused political/legal thing where Donald Trump knew he lost the election and he tried to cheat. I got to say, I think that Donald Trump is never going to go to trial on any of these cases before the election. And during the News Blitz tonight, I'll explain his strategy about putting it off. And if he gets elected again and he's president, some people say he could pardon himself. And in terms of Jack Smith, can you imagine in the Oval Office? Oh, Mr. Smith, thanks for coming in. Let's have a chat here. You're fired, you deranged lunatic. That's going to be the interaction between Smith and Trump.
Yeah. Mr. Smith, you're fired, you think? It's going to happen?
Yeah. Well, I think that's what Trump would like to do. There are a lot of things that have to happen. But, the other issue we wanted to talk about during the News Blitz, Frank, is yesterday's congressional testimony is kind of being overshadowed by the Trump indictment, number 3. But Hunter Biden's pal, Devin Archer, he could sink the Biden presidency. And I'll explain why during the News Blitz.
A lot to talk about tonight, certainly. And in the meantime, and all this, President Trump's ratings as far as the election here seem to be going up in the face of all this.
It's amazing. John Phillips was talking today during his show about how the New York Times has a poll out today, and it says basically Trump is in a dead-even tie with Biden. I mean, just think about that. He's been indicted twice. Everybody knew the third and probably the fourth one out of Georgia is coming up very soon, and yet he's tied, even Steven, with Joe Biden, which is an amazing fact. And the other angle that John got some good feedback from listeners on, I want to follow up on that as well. What's going to happen? What's going to happen if Donald Trump does squeak in and say wins with like 42% because a bunch of third parties, RFK Jr. and so on? The left is just going to go ballistic. I mean, we could see some major violence in this country because I don't think people are going to take Donald Trump in a second term lying down. It's going to be very scary.
You're definitely an uncharted political territory here and legal territory, certainly. And what about Ron DeSantis? Does he need to be indicted to maybe get a higher approval rating?
Man, can you imagine? I mean, it's like that old Saturday Night Live skit where Dukakis said about Bush, I can't believe I'm losing to this guy. DeSantis has to be saying, I can't beat him after an indictment and a second indictment and a third. It's basically an indictment bump that Trump gets every time.
No, you're right, rhyming now.
Yeah, you're right. You're right. Well, I'm learning from the best, Frank. But, it's just so weird. Now, of course, people say, well, it's a short term, great thing for Donald Trump. Nobody's talking about DeSantis or Nikki Haley. Trump's sucking all the oxygen out of the room. He's raising gigantic amounts of money. But what happens if the convictions start to roll in could be a different story. And I think that's the Democrats' end game. No big secret there. I don't think they want Trump out of the picture because I think they worry that Nikki Haley or DeSantis and others could beat Biden. But a wounded Donald Trump getting nominated and then getting creamed by Biden in the November 24 election, that's the Democrat playbook.
And to use a Hollywood expression now, maybe DeSantis is saying that he can't get arrested.
He absolutely can. I saw just an hour ago he's criticizing the grand jurors in Washington, D.C. And speaking of Washington, D.C., Frank, the residents of Washington, D.C. voted 92-5 in favor of Biden over Trump in the presidential election. And those are the people who are going to be on his jury in Washington, D.C. And he's looking at like 40, 50 years behind bars. Is there any question that the population really hates Donald Trump? Is that going to produce a fair trial, or is he going to have any kind of shot at moving it out of Washington, D.C.? Big questions.
Then all this in the midst, as you noted at the beginning, with this other scandal with President Biden's son very much in the spotlight. Such tremendous politicalization of this now. And how is this going to look in court, you think, with and you probably have done some research on the various judges involved here with politics, of course, playing such a huge role in all this?
It's kind of sad to me that, and I talk about this a lot on our podcast, Too Many Lawyers, with my son Connor. I always say to him, I'm really discouraged that you could always predict how a judge is going to come out on an issue if you look at who appointed the judge. And it shouldn't be that way. And Connor's reaction, of course, being a true progressive as well, I want progressive policies implemented, and so if a judge is progressive, so be it. I disagree with him there. I think judges should play it down the middle. I'm not opposed, Frank, to AI, robot judges. We're going to have robot umpires pretty soon in baseball. Why not in court as well?
That's what it's coming to. Very interesting. So the judge in this case now is a Obama appointee. Is that right?
Yeah, I believe that's true, and so you're going to see some negative rulings almost certainly against Donald Trump in this case. The good news for Trump is that there are some kind of flaky statutes that they're relying on in this case, statutes that really weren't intended to apply to this kind of activity that's alleged against Donald Trump, and therefore, under some circumstances, Trump has a right to take early appeals and go all the way up to the U.S. Supreme Court if they're willing to take it, and they could toss out big chunks of this case. So it's not all bad news for Donald Trump.
All right, and Will these trials take place before the election?
No, they're not going to take place before the election. I predict that they all get put off because Trump's going to make some credible arguments, and he's going to be allowed to go up to the U.S. Supreme Court. He could get some good news. And at the end of the day, Frank, I think the American public, they're very worried about weaponization of the judicial system. It is a fundamentally unfair thing, and it is so transparent. I mean, you set up this buffer. Well, we're going to appoint a special counsel, Jack Smith. Jack Smith's pedigree is he was bashing Republicans years ago, left and right, got his hands slapped by the courts. So nobody's pretending that this guy is objective. Now, if Donald Trump really violated the law, of course, no man is above the law. But it just looks so bad to weaponize the legal system like this.
Looking forward to the 6 o'clock hour, the 790 KBC News Blitz, hosted by longtime 790 KBC legal analyst Royal Oakes, also host of the Too Many Lawyers podcast with his son. Royal Oakes, thank you very much for stepping in for a moment. And as you take over the microphone here in the 6 o'clock hour, thank you very much for joining us live here tonight on Mottek On Money on 790 KBC. You can bring up the Mottek On Money podcast on demand right here at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Catch you again tomorrow night in the 5 o'clock hour. Mottek On Money on 790 KBC.